Today, Bitcoin trades back above $80,000 to end the week. President Trump signs a bill to erase a controversial IRS crypto broker rule. And Kraken's Thomas Perfumo breaks down what drove crypto markets this week and what we can expect as the tariff drama continues. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices following equities higher to end a wild week of trading, with Bitcoin trading above $82,000 as of noon Eastern. Ether climbed more than 4.5%, and Ripple-linked XRP jumped more than 3.5% after the company and the SEC filed a joint motion requesting a pause in their appeals to finalize a potential settlement. Last month, Ripple CEO Brad Garlinghouse said the SEC is no longer pursuing its appeal in the case against the payments company. Some reprieve for crypto-focused stocks as of midday. All are in the green, with Strategy jumping almost 7%. For the week, Bitcoin ending down 2% and closing below $83,000 for the first time since November 2024. Ether is down more than 13% week to date, its third straight weekly decline and worst weekly performance since February. XRP is down 6% in the same period, posting its third down week in a row and first such streak since February. The weekly losses came amid a drama-filled week driven by global tariff developments. Today, China retaliated against Trump's country-specific tariffs by raising its levies on U.S. goods to 125% from 84%. Okay, let's talk about the top stories. President Trump signed a resolution rolling back the controversial crypto tax guideline known as the DeFi broker rule. Signed yesterday, the resolution eliminates an IRS rule approved in the last days of the Biden administration that treated DeFi platforms as brokers required to track and report user activity. This is the first crypto bill ever signed into law, and the bipartisan support on the bill could bode well for other crypto legislative priorities like stablecoin regulation and market structure. Executives celebrated the resolution's passage, with the Blockchain Association's CEO saying in a statement that the rule promised an end to the United States crypto industry and that she's grateful to have this harmful rule off the books. Next, Senate Democrats are urging the Department of Justice to reverse its closure of the department's crypto enforcement team. 6 Democratic senators, including Elizabeth Warren, Dick Durbin, and Richard Blumenthal, sent a letter to Deputy AG Todd Blanche yesterday, arguing the DOJ's decision will, quote, support sanctions evasions, drug trafficking, scams, and child sexual exploitation. The senators point to an FBI estimate that losses to crypto fraud amounted to $5.6 billion in 2023, a 45% increase from the previous year. They argue allowing entities that enable these crimes to operate without fear of prosecution would lead to even more Americans getting exploited. Blanche sent a memo earlier this week directing prosecutors to narrow down crypto investigations to crime involving investor fraud, terrorism, human trafficking, cartel operations, and cybercrime. We reached out to the DOJ, and a spokesperson confirmed the department received the letter but declined to comment further. Finally, New York Attorney General Letitia James is urging Congress to pass crypto legislation. In a letter this week, James argued it's vital that crypto platforms register in such a way to protect investors, and that platforms must publish listing standards setting minimum qualifications. She highlights cases of crypto-related losses in the state, saying 26,000 New Yorkers lost money in then-crypto lending platform Celsius, which filed for bankruptcy in 2022. She also points to losses from Gemini Earn that her office helped recover in a $2 billion settlement last year. Momentum around crypto legislation is picking up in Congress as lawmakers debate 2 separate bills for creating a stablecoin framework. All right, back to markets for our main story. It's been a wild week for both crypto and stocks, so I spoke with Kraken's Thomas Perfumo, a global economist at the company, about what's driving the volatility and what we can expect in the weeks to come. Thank you so much for joining me on Crypto World this week. What a week, right? Bitcoin not totally immune from the whiplash that we saw in the market, but I will say nice to see kind of milder pops and drops than what we did see in stocks. What is your sort of big takeaway from this week?
Yeah, definitely. I think my hypothesis coming into this year was that the macro environment was going to be a big deal for crypto, in particular with the new regime shift going on. And I think that's proving true here. Of course, when you have these kind of big macroeconomic shock events, the first thing that happens is most risk assets get sold off. And importantly, the correlations also typically get much higher. And so even though crypto went from, call it 0.5 to 0.6 correlation, positive correlation with US equity indices around the time of the election in November of last year, it actually dropped down to the teens back in February of this year as crypto was making all-time highs, at least Bitcoin was. And we're right back to that kind of zero point 0.5 to zero point 0.6 level of positive correlation. So what we're seeing is kind of this natural reaction of people, investors in particular, are just de-risking across the board, trying to make sense of the uncertainty and trying to understand where they want to position, where their conviction lies going forward. So that's kind of what we're seeing with the washout. And with Bitcoin in particular, I personally think it's been relatively holding up better than I expected going into an event like this, probably in part because it's more viewed as that kind of defensible, safe haven asset within the crypto industry itself.
This morning, at least for the week, gold the outperformer. Measuring from Monday, Bitcoin up about the same percent for the week as the S&P 500, and then the dollar index, the biggest loser after it earlier suffered its biggest drop in 3 years. What does Bitcoin standing against those other assets in this moment, in the context of the global trade war that we're watching, and the heightened economic uncertainty and recession fears? What is this telling you about how investors are valuing Bitcoin right now relative to the other major assets?
Sure. So when I look at gold, it's had a great performance both this year and last year. I think it's roughly, if I'm not mistaken, around 40 to 50% up since the beginning of 2024. And when I look at Bitcoin's performance, of course, it was up triple digits last year, plus 111% roughly. And now we're down, I believe, teens year to date. And so we're more around, call it 80, 90% positive performance since the beginning of 2024. And so Bitcoin is still comparably doing better than gold. Of course, a little bit higher volatility in that. But when I think about the reactions of this year in particular, gold has kind of an interesting story behind it because there is this issue around the settlement of gold. And so even months ago, you started to see backlogs where spot gold was difficult to move. And you've had record inflows and movements of gold from the UK to Europe, or excuse me, from Europe and UK over to the US, for example. And that does have an impact on the price itself. And so there is a little bit of this interesting dislocation that's happening from a supply-demand perspective with that asset. With stocks, we talked about this idea that risk-on assets are just not the hot thing right now, and so that's getting sold off. And crypto is considered, in my opinion, a risk-on asset, and correlations have gone up, and so we see crypto impacted there as well. The dollar index is interesting in that it's actually had a pretty strong positive and negative correlations with crypto in the past, looking historically. And in my opinion, what people are really going to be looking out for when it comes to really getting into crypto meaningfully over the next few months and putting more allocation and money to work, it's going to be thinking about the central bank responses around the world. And so that's going to be a meaningful impact on the dollar index because it impacts foreign currency rates. So I think what investors right now are probably looking forward to, given the reprieve, this 90-day kind of standstill, at least on countries that are willing to negotiate a new trade deal with the U.S., people are really just eyeing what kind of escalations and tit for tats are happening with China. And then secondly, how is the Fed going to respond? And with this 90-day reprieve, we're now jumping right into that May scheduled FOMC meeting. So it's possible we don't get even an emergency meeting in between. We just wait for that kind of May meeting for that clarity. And so I think that's where you're going to see the interplay of the dollar index with crypto going forward, is what happens when it comes to liquidity and interest rates.
One thing that many this week have pointed out is Bitcoin's apparent maturity. At its lowest point this week, a 30% drawdown from its January peak, which is kind of a dip for ants in crypto world, especially if you compare it to some of the drawdowns that we're seeing in the major tech stocks, and then even more so if you compare it with Bitcoin's big drawdown from 2021 to 2022. Who or what is supporting this floor, this new floor that Bitcoin has fallen to, call it $75,000, which I think is also its 365-day moving average, or right around it. What's supporting that?
Sure. I mean, I think you do have in the kind of mainstream culture this shift in just view that Bitcoin is potentially the next store of value asset for the world. And you have headlines like countries looking to possibly settle trades between themselves and Bitcoin, as an example. When I look at that, I think that's a really meaningful narrative change or shift that's happened in the last 2 years alone. And you see it in the demand from like institutional investors, particularly last year, of course, with all the net inflows from the Bitcoin ETFs. And even this year, we still are in positive year-to-date net inflow territory. I was looking at the net flows over the last week or so, the week and a half, and none of these drawdowns even break the top 10 worst drawdown days, in terms of net outflows, going back to January of 2024 when the ETF started trading. And so I think Bitcoin is showing up as a good safe haven asset on a relative basis. As far as maturation, you're right. The volatility of Bitcoin is surprisingly holding up pretty well too. I mean, this is an asset that historically, when you had massive drawdowns or risk events, the volatility could realize or shoot up as high as 100% or higher. And nowadays we're in the 50s. And so I think what we're seeing is a pretty strong bid with these drawdown events on Bitcoin in particular. And of course, the biggest buyers, I would say in the last 6 months, at least single buyers, would be players like MicroStrategy, the collective Bitcoin ETF issuers. These are the ones that I look to that have, of course, the most information available. But nevertheless, you still see like consistent level of activity, including volumes at exchanges of people who are taking an opportunity to buy Bitcoin on these drawdowns. And so when I think about Bitcoin as a safe haven asset, one of the cool things that I think we get to lean into, including in this year, is if you look at any other asset, which other asset can you look to and say, I know exactly how much Bitcoin is getting created pretty much every single year, year in, year out. I know exactly what the supply is going to look like. So as investors are trying to make a decision around where they need to put their money on the sideline, should it be in treasuries, but those bond values are falling all of a sudden, even though you think that it would be a safe haven asset, this is an asset that has a degree of certainty that other assets just aren't afforded because of its design and construction. And so I think that advantage has given it a leg up in this recent rundown.
Okay, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.